Ladies and gentlemen, good day and welcome to the Q2 FY23 earnings conference call of BOROSIL Renewables, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Kishore from Axis Capital. Thank you, and over to you, sir.
Thank you, Stephen. On behalf of Axis Capital, I am pleased to welcome you all to the BOROSIL Renewables Q2 FY23 earnings conference call. We have with us the management team of BOROSIL Renewables, represented by Mr. Ashok Jain, Whole-Time Director, and Mr. Swapnil Walunj, Head Marketing. We will begin with the opening remarks from Mr. Jain, followed by an interactive Q&A session. Over to you, sir.
Thank you. Good afternoon and welcome to the BOROSIL Renewables Q2 FY23 investor call. The board of BOROSIL Renewables approved the company's financial results for Q2 and H1 FY23 on November 9. Our results and an updated presentation have been sent to the stock exchanges and have also been uploaded on the company's website. We will discuss the operations of BOROSIL Renewables on a standalone basis. I will thereafter provide you some highlights of the operations in our newly formed acquired overseas subsidiaries. During Q2 FY23, the company recorded net revenue from operations of rupees 169 crore, a growth of 5% over previous year corresponding quarter. Sales volumes were lower than in Q2 FY22 by 11% basis Ind AS adjustments, though the actual decline was only about 2%, which was attributed to a lower production in September this year. Overall domestic demand for solar glass has remained strong as the manufacturing of domestic modules has picked up ever since the custom duty on import of modules came into force from April 1, 2022, and the solar installations have gained momentum. The domestic manufacturing of modules and consequently the demand for solar glass was higher by about 25 to 30% in Q2 FY23. This additional demand has been made currently through a surge in imports owing to limited availability of domestic capacity. Market share of BOROSIL Renewables in domestic volume sales has consequently come down to about 22%. Export sales during Q2 FY23, including to customers in SEZ, were rupees 47.9 crores, comprising of 28.3% of the turnover. Average prices of solar tempered glass during Q2 FY23 were about rupees 139 per mm, an increase of over 18% over Q2 FY22. Average prices for the quarter were flat at the levels prevailing in Q1 FY23. However, there has been a change in the status of anti-dumping duty from China. Earlier, the designated authority, named as DGTR, had extended the validity of ADD on solar glass from China until 2 years after expiry on 17 August 2022. However, this recommendation was not accepted by the Ministry of Finance. Consequently, there is no ADD on Chinese manufactured solar glass since mid of August. This has rendered the CVD against Malaysia ineffectual as the exporters have shifted the supply base back to China. BOROSIL Renewables has filed a writ petition in Gujarat High Court against the decision of the Ministry of Finance, and the matter is listed for hearing on November 11, which is tomorrow. The import of solar glass continue to enjoy an exemption from payment of basic custom duty, though solar modules and cells have been subjected to BCD from 1st April 2022. Meanwhile, prices have declined significantly in September 22. Apart from the lifting of imposition of ADD on Chinese manufacturers, the lower than expected demand in China has led to a drop in FOB prices with a support of 13% export subsidy, despite a global increase in input costs, especially in respect of gas and soda ash. Moreover, there has been a significant drop in freight rates from China as compared to about 2 months ago. Consequently, landed rates of solar glass imported from China have caused a downward pressure on prices in India. We had to drop our domestic selling prices by an average of about 13% in September 2022 in view of these lower import prices. During Q2 FY23, the company earned a EBITDA of INR 44.1 crore. The EBITDA margins were at 26.1%. It suffered a decline of over 400 basis points since Q1 FY23 and about 1,000 basis points as compared to Q2 FY22, owing to cost inflation in raw materials and energy, as mentioned above. I have been mentioning about rise in input cost, mainly the soda ash and natural gas in the last few meetings. The company has been making efforts to reduce the impact in cost by achieving cost savings in raw materials by altering batch mix suitably and in electricity by going for captive power generation to some extent. However, the cost increases combined with reduced selling prices owing to cheaper imports from China are squeezing EBITDA margins to below an expected normalized margin of which we consider of 30%. During Q2 FY23, the company earned a profit before tax of rupees 32.9 crores. The profit after tax was rupees 24.3 crores, as compared to INR 34.1 crore during the corresponding quarter in the previous year, which shows a decline of 26%. For the half year ended September 2022, the company clocked the revenue of rupees 339.2 crores, a growth of 14% over corresponding half year last year. The company earned an EBITDA of 94.4 crores, a margin of 28.1%. Profit after tax was rupees 54.4 crores, showing a PAT margin of 16%. Our 10 megawatt captive power plant of solar plus wind energy through an SPV in which BRL will be holding 31% is expected to be commissioned by next month, December 22, and BRL will be able to use this green power besides reducing the cost of electricity. We are also looking to set up an additional 8 megawatt solar plus wind power plant. The overall demand situation for solar glass continues to look extremely robust both in India and abroad, and the following measures will strengthen this. In a recent development, the Union government has closed the project import route that would have helped circumvent the basic custom duty on solar modules and cells by paying lower duties. This move is expected to curb the import of solar cells and modules and give impetus to domestic manufacturing and consequently demand for solar glass. However, the projects bid out before March 21 will be exempted from this. The Union Cabinet had earlier approved the second tranche of PLI, Production Linked Incentive Scheme of Rs 19,500 crores. Ministry of New and Renewable Energy, MNRE, has announced guidelines for implementation of this scheme. About additional 65 gigawatt of manufacturing capacity is expected to get benefited from this scheme. The PLI scheme has a component for sourcing of ancillaries of PV modules like solar cells, solar glass, EVA, backsheet, etc. locally. This component ensures a higher payout of incentive for local procurement of ancillaries. This arrangement will incentivize the module manufacturers to procure solar glass domestically. Global supply chain bottlenecks and heavy rains in Gujarat delayed commissioning of our expansion project. We now expect to commence production from our third furnace, SG3, in December 22. This will enhance our capacity by 550 tons per day and take it to 1,000 tons per day, equivalent to 6 gigawatt. The company will review the situation and take effective steps for next phase of expansion at an appropriate time in the last quarter of this financial year. The company has, through its overseas subsidiaries, acquired 86% of Interfloat Corporation. One second, please. Sorry for this. I'll repeat it. The company has, through its overseas subsidiaries, acquired 86% of Interfloat Corporation and GMB, now both together called as Interfloat Group, and taken control of this. GMB Interfloat's reputation has a reputation of a high quality producer of solar glass, which is expected to strengthen BRL's global market position in the long run. The acquisition adds a 300 ton per day to BRL's global capacity and also widens its range of offerings, including varying textures, coatings, dimensions and thickness, and brings in synergies in manufacturing and sales operations in India and Europe. During the 9 months of calendar year 22, the Interfloat Group registered a revenue of euro 54.7 million with an EBITDA margin of 5%, which was lower than normal due to extremely high energy prices. The demand situation for solar glass continues to look extremely robust in the important overseas markets, that is Europe, USA and Turkey. We see growth opportunities for meeting this requirement. Most nations are trying to raise domestic production of solar cell and module, and also trying to reduce dependence on Southeast Asian countries, which places India in an advantageous position for exports. Our step of having manufacturing in Europe through Interfloat fits in well along with expanding production in India. With that, I would like to open the floor to questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead. Mr. Mohit Kumar, your line is in talk mode. Kindly go ahead with your question, please.
Yes, sir. Hi, sir. Good afternoon, sir, and thanks for the opportunity. So my first question is on the EBITDA margin, which had declined in this quarter. Can we expect the EBITDA margin to go back to the earlier quarter as we go forward? Or do you think there is some pressure as we in H2 also?
You're right, the margins have declined, and this has become because of the drop in the selling prices. So we are trying to make all our efforts to bring in savings in raw material batch mixes or coating liquid or other aspects of manufacturing. And besides that, we are also expecting economy of scale after our commissioning of third furnace, which will happen in next month. So in this quarter particularly, the margins are going to remain low, but Q4 onwards, some improvement can be expected in the margins. But this current margins, if you notice, are having partial impact of rate decline because the decline has taken place only in September. So yes, the margins are going to be lower.
So are we seeing signs of more capacity coming up in the domestic side, and are we in discussion with those new capacities? Because we haven't heard many of the capacities commissioning as of now. We do expect over FY24 there will be more commissioning, but I think commissioning on the domestic side has been pretty low as of now.
Yeah, you are right. Actually, there are 3 plants which are under construction as per our information, and these will add up to close to 1,000 tons per day when they get commissioned. All the plants have got slightly delayed because of the conditions of rains and other things, and also delays in supplies from the vendors and all. And we believe these plants will get commissioned sometime during the next calendar year, and they should be in operation in the next calendar year, of course. And these plant together with our 1,000 ton capacity will still be short of the demand in the country.
And any color on the input prices, soda ash and gas? Are you seeing some easing of the raw material inflation, or are you seeing, or the prices are sustaining where they are right now?
So in terms of the gas prices, we all know it has linkage to the Ukraine-Russia conflict, and unless there is some relief there, the prices may not come down substantially. There has been some softening in the oil prices, but again it has gone back to $99, and also there is no much change happening there. In terms of the soda ash prices, there has been small correction, but largely speaking, there may not be a significant drop in the price in next calendar because the new capacities which are coming up for soda ash production will probably get commissioned only in 24. So we may not expect much relief in these two costs.
Understood, sir. Thank you and best of luck, sir. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Naisar Parekh from Native Capital. Please go ahead.
Yeah, hi. Thanks for taking the question. After the price reduction that we have done in September, what would be the price difference between Borosil and the China imports?
So as you would know, the prices in India are actually led by what kind of prices are prevailing in China and rather the landed cost of imports. So all our customers benchmark it against the import landed cost of solar glass, and since that has gone down, the domestic prices also have gone down. Now there has been certain amount of premium which we command from being a local producer because of certain benefits which they expect from us, like inventories, working capital, just in time, and flexibility in ordering, and many other benefits. So there is some premium which we get as a local manufacturer. That premium is slightly higher today as compared to past, but we have to adjust our prices downwards because of the lower prices.
What would that premium be?
Well, in the past it used to be on an average 5% or so. Currently it may be about 10%.
Okay, got it. And you mentioned the margins could be lower. So, if we assume the September prices to continue, are we looking at like 15% kind of margin range, or, assuming the September current prices continue, how should we think about margins?
So while it is not easy to predict the margin like that, because the prices keep changing depending on the demand supply scenario, particularly in the Chinese solar manufacturing, we already see certain strengthening in the prices as we speak. So we cannot be sure of what kind of margins it will finally be in the next quarters. So it will be hard for me to comment on 15% or whatever number you are saying.
Okay, so okay, got it. And how much is the price cut that we took, after the China duty stopped, like mid-August, September? What is the price cut we took from our earlier pricing?
So 10 to 13% was generally the cut which we had to go through because of the pricing. But we are also trying to economize on many aspects. So net what will be the margin is difficult to predict right now. And also I mentioned about the scale benefits which will accrue once we commission the plant next month. So it will be a mix of every situation, and it cannot be just considered based on price alone.
Okay, got it. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Anurag Kulkarni from Punartha Investment. Please go ahead.
Hello, sir. Thank you for the opportunity. My question was with regards to the inventory. I see that the inventory has increased by 65% as compared to March 22. Could you provide some color on it?
Yeah, so inventory, basically we maintain a very little inventory in the form of finished goods or work in progress, but because of India's accounting practices which have to be adopted, there is certain fluctuation which is shown. So in terms of the closing day inventory, there could be some inventory which is dispatched to the clients, but it is not recorded as a sale and it is added back to the inventory. So that's how the inventory may keep fluctuating on quarter to quarter basis, depending on how much the sale has taken place in the last few days of the month. But practically there is no much inventory in the company.
Okay, thank you. That answers my question.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. Next question is from the line of Sharon, an individual investor. Please go ahead.
Hello, sir. Thanks for the opportunity. My question is, in the last release note of acquisition of companies in Germany, there is mention about that helps you to do the other products and technology. So are there a plan to make any other products like apart from solar in the Germany or in India in future? I see a clear mention about that.
So the mention was regarding various product categories or segments being serviced from Germany or India. So we will obviously get certain synergies in both the operations, and some products which are being made available from German plant currently, which are not being made available from India, will be possible to do that. So all those things will be implemented in due course. In terms of the technology also, there like in India we have very high throughput. We produce at much faster speed and all, which we'll try to implement there after assessing the situation, and that will increase the productivity at that plant level. So all those synergies are what we had discussed, which continue to be our focus.
Okay, can you name the products apart from glass? What are the products you are planning to develop in near future?
So product remains the same, solar glass only, but there are various segments which are not or which are serviced from there or here, which may not be the case at the other location. Then there are, say, coatings or, say, two-side coated glass or various glasses, but for the same segment. So
okay, sure.
We will essentially be in the same product ranges, but segments could be added or new products for those segments could be developed at the other location, taking advantage of the synergies.
Yeah, and recently I was listening to the interviews of GSCL and Tata Chemical, and next couple of years they are very confident about the high price of soda ash. How is that going to affect Borosil Renewable? Whether will you be able to pass on the price to your end customers and maintain the margin levels, or that will impact your margin going forward? Can you throw some light on that?
Yeah, well, as I said, the new capacities will come into operation only later, maybe in 2024 towards the end or like that. So it is certainly going to, the market for soda ash is certainly going to remain tight, and to that extent we don't expect relief in soda ash prices, or rather say much relief. In the case of all the players of solar glass or glass manufacturing, the prices are same. So soda ash is a global commodity. Whether I produce or my competitor produce in India or abroad, they have to pay more or less similar prices. So we will have to see how the demand supply situation on the solar glass front take place, which will be a better pointer to look at in terms of the pricing and pricing power, whether we'll be able to pass on or not. But in terms of the soda ash price, we don't see much relief coming in.
Okay, and there was a QIP planned and it was approved by the board earlier, and still that is not happened. Will it happen in near term, or what is the plan on that part for fundraising? So
that approval which shareholders gave in the previous AGM has expired in this AGM. So that was over, and now we have taken a permission for another fundraise of another 1,000 crore rupees recently in the last AGM. So we will be doing this fundraise as and when it is necessary for the next phase of expansion. So we will be on the lookout for an opportunity, appropriate time to raise the funds and use for the next round of capex.
Okay, sir. Last question about the Germany. There are energy prices very high, and when your acquisition will get complete and when you start the operation under BOROSIL, how will the energy cost going to effective, and when do you see the energy cost coming down in Europe? Yeah, can you explain that?
So acquisition is 86% shareholding is already acquired. We are in control of the company as we speak, and we have started to take active interest in the management of the company. So yes, the gas prices or energy prices has been a moot point of this particular situation, and because of the Russian and Ukraine war, this situation has remained under a strain. Now, what we believe is that energy prices will stabilize over a period, or rather have downward trend over a period of time. But there are some positive signals from the government in Germany that energy prices will be kept for the industry and for the households. With those capped prices, we feel that a decent margins can be earned by the company. Should there be a challenge in getting those prices, we will have to seek higher prices from the customers. And last year they have supported the domestic local manufacturing to pay higher prices because of the higher gas prices and higher electricity prices. And to the extent the prices remain high this year, we will have to depend on customers to pay a little higher than normal price.
Sure. Okay. Thanks. Thanks for the time, and I appreciate your courageous decision of acquisition in Europe for the future growth and being transparent for all the issues during acquisition. So thanks for the opportunity and all the best for future, sir.
Thank you so much.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thank you, sir. Two questions from me. First, what proportion of your exports are to locations with the anti-dump against China? And how competitive are you really in areas where there is no duty?
Well, we used to have 20% or thereabouts of export out of our revenue. Currently, it is higher because there has been better prices in export market, and local prices have decreased from September, as we all know, because of the anti-dumping having gone. So that is one position. And then in terms of the anti-dumping duties against China, there is anti-dumping duty in Europe and also in Turkey. But against Malaysia and Vietnam, there are no anti-dumping duties in any of the countries, like Turkey or Europe or USA for that matter. So we are competing with China, Malaysia and Vietnam as a combined force, because Malaysian and Vietnam production is also owned by the Chinese major players only. So we are effectively dealing with them in that sense without any anti-dumping duty, because the exports are coming from Malaysia and Vietnam. And almost you can say 95% of our exports are to Europe and Turkey. Only about 5% maybe to other countries. So we are, and in those countries like USA, there is no import duty against China. So this is the situation.
So Europe and Turkey both have anti-dumping duty against China?
Yes, they have. Against Malaysia and Vietnam, they don't have.
Right. So the next question is related. So after removal of anti-dumping duty on imports from China in India, now what is the net value proposition for your customers in India to buy from Borosil Renewable versus importing from China? What is the pricing differential or any other value that the customer would see from buying from Borosil? Could you quantify that?
Yeah. So value proposition is of a local supplier and supply chain related value addition, which is quite important in this industry, because there is a very, very high working capital involvement in module making industry, if you know, and solar glass is only about 10% of the cost of the module. So they would like to have assured supply source, which is for the this 10%, which can affect or disrupt their manufacturing for the manufacturing line for the entire value chain. So they would like to have a assured source of supply, so which is what we offer from India. Then we offer benefits in terms of working capital or flexibility in ordering smaller orders, so immediate delivery like situation. Also on the payment terms, there would be certain relaxations in India as compared to imports. So all those benefits are the ones which local buyer expects from a local manufacturer, and which is why he is prepared to buy locally and also pays a little higher. In terms of the future growth potential, like PLI scheme, I had mentioned that the scheme provides for additional incentive to the module manufacturers for local use of local producers, locally produced items. So there could be additional incentive for them to buy locally. These are the things which I feel would support local manufacturing of these items.
Thank you, sir.
Okay.
Thank you. The next question is from the line of Anuj Upadhyay from HDFC Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. So you mentioned about the duty imposition in Europe from the China thing. Could you mention the timeline, sir? Till when this duty is imposed and when it will come for renegotiation?
You asked for Europe, isn't it?
All right, sir.
So in Europe, the anti-dumping duty is applicable till 2025.
Okay. And secondly, sir, is there any support for the local glass manufacturer in Europe? Likewise, we have a DCR requirement here where a local manufacturer gets the support from the local authorities. So is there anything incentive for the local manufacturer out there?
Well, there is no direct incentive to promote local manufacturing or use of solar glass for that matter. But now the government, European Union has decided that they want to have higher amount of installations. That means their solarization program is going to accelerate further, which is necessary for them. You know, they are trying to replace the use of gas for the production of electricity to solar energy. So they can get the home power for the residences and offices by producing from renewable sources like solar power, instead of converting gas to electricity and supplying that. So they want to reduce the dependence on gas sources, and in that context they want to increase the installations to 60 gigawatt per annum. And the European Union also mentions that they would like to produce 25 gigawatt of local manufacturing, like modules and cells and other things. So once that is done, the demand for domestic production or domestic consumption of solar glass will go up. Now, being present as a local producer in Europe now, through this Interfloat acquisition, we will get an advantage of our presence there and trying to get this additional demand in our favor, from whether from India or from Germany, and that will be the benefit by being a local producer. But in terms of any incentives or any local content requirement, there is nothing for the solar glass.
Fine, sir. And sir, a few questions related to your balance sheet. Sir, our non-current assets, other non-current assets have gone up significantly, so has our CWIP. Could you just highlight the reason for the same?
Other non-current assets, I think it is CWIP 300 crore something which you are referring?
Sorry? Yes, sir.
If it is CWIP, then it is the expansion project. I have to really look at the numbers. Can you proceed to the next question? I'll just open the balance sheet and see.
Fine, sir. In the meanwhile, sir, you mentioned that the 550 tons per day, the 500 tons per day of our third phase of capacity expansion will now be get commissioned by December. Am I right, sir?
Yes. Yes. Yes, you're right. Yes.
Fine, sir. Just a clarity on that other non-current assets. That's it from my end.
Yeah, I'll come back to you on that.
Thank you. The next question is from the line of Devang Patel from NAFA AMC. Please go ahead.
Hi, sir. Firstly, can you update on what is the impact of gas leakage at Interfloat? Is it taken care of, and what are the costs for that?
Yeah, so gas leakage actually happened on 31st of July this year, and immediately the furnace design supplier and the insurance company and the relevant like fire department, everybody was alarmed with this situation. This fire was brought under control within the next 24 hours, and the hot repair of the furnace was carried out while the furnace was hot. So all those things have been done, and by 22nd, 23rd of August, the furnace was recommissioned. So the production has resumed there from that date, and the furnace is operating at full capacity as of now. Now, when you do a hot repair of a furnace, the life or the remaining life of the furnace cannot be expected to be very long, and proper cold repair has to be done. So when we are taking stock of the situation there, and we will plan for a cold repair of furnace in the next calendar, in the beginning of next calendar, and that time the furnace will be shut down for cold repair for 2 months, and then it will be recommissioned.
What will be the cost of that approx?
Well, only related to cold repair, it will not be a large cost. It may be about 2.5–3 million euros. But there will be certain changes which we will like to make in the equipment and production lines, because now the glass sizes have increased as it has happened around the world. So we will build in capabilities taking advantage of this situation of cold repair to change certain equipment or to enlarge the size of those equipment in order to service the new requirement of large size glasses. So there will be certain expense on that as well, which will be much larger than this 2.5 million. So we are just taking current estimates of that, and then we will be taking up that project around that time, maybe in the first quarter of next calendar.
Okay. Sir, on the Interfloat acquisition, the whole deal structure has undergone change. So can you just highlight what these changes are, what is the valuation of the whole entity, and our roadmap to increase the stake to 100%?
Okay. So last deal, binding deal which we had signed was for 100% acquisition of shares, and we were to issue shares of Borosil Renewables for 22.5 million euros, and to pay cash 30 million euros, and also share 50% EBITDA for 3 years, calendar year 24, 24, and 26. Now, after this leakage and also the more severe situation on the gas front, we had virtually put a deadlock to the transaction, and that led to renegotiations. And the sellers realized that to stick to that deal may not be feasible, and they gave a certain revised offer which was accepted by us. And the revised offer like this, there are two shareholders in the company. There were two shareholders in the company. One had held 86% and the other was holding 14%. So the person holding 86% has moved out completely, and the other one holding 14% has remained in the ownership. So now the deal which has finally happened is of 86% shares, and for that we have paid 7.5 million euros to the outgoing shareholder. There have been certain other expenses which have been incurred, and also the EBIT sharing, which was at 50% earlier, has been brought down to 20% to the outgoing shareholder. And the continuing shareholders will have a call option after 3 years.
And for the pricing for that is not determined yet?
Pricing will be based on the multiple is determined at 7 times the EBITDA, and EBITDA will be applicable as per the then prevailing EBITDA.
Okay. That's all from my side, sir. Thank you.
Okay.
Thank you. The next question is from the line of Harsh Lakshmi, an individual investor. Please go ahead.
Hello. Good evening, sir. Am I audible?
Yes.
As we discussed, company will be having more than double production capacity. So from economies of scale perspective, we will be gaining something in terms of production cost. So will you be able to quantify that in the terms of percentage?
Yeah, absolutely. So there will be definitely a scale benefit which will accrue to the company, and that will translate to cost reduction in terms of per unit cost. As it happened in the last expansion, we had saved about 3 to 4% in the cost, which is what we expect to do around this time. We are expecting 3% cost savings.
Okay, sir. Thank you. That's all from my side.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Lavanya from UBS. Please go ahead.
Hi, sir. Thank you for the opportunity. So I wanted to check on just a similar way how you have highlighted how in India, domestic manufacturers are preferred over import. What are the reasons for someone to prefer domestic manufacturer over importing? Can you just help a similar analogy? If someone in Europe, would they prefer importing from India, Malaysia, or Vietnam? How does it make it any difference for them to import from any of these 3 locations?
Yeah, so this local manufacturing advantage is being viewed positively for all the module manufacturers or in this value chain because of the reasons which I had mentioned some time back in the form of supply chain and logistics robustness and they want assured supply, and also they are having the advantage of local manufacturers offering working capital advantage and other things. So similar kind of situation prevails in Europe also. The customers there are able to pay a little higher price to the local manufacturer as compared to imports. Another positive thing is for India is that now for last 2.5 years, the European and American markets are generally looking at China plus 1 strategy, and they are rather trying to discourage imports from China and rather shift to Indian exporters. So in terms of both, like our presence in Europe as a local producer and our being able to supply goods from India, we are in a good position to increase our presence in export in Europe.
Got it, sir. So that's the reason I wanted to check if it's China plus 1. So would they prefer Vietnam or Malaysia or India was my question. Like would they consider Malaysia and Vietnam or also like from Chinese players and give a benefit to India?
Yeah, absolutely. Your question is very well taken. The Chinese manufacturers only have set up those Malaysian and Vietnam plants. So these are basically Chinese companies only, and they do not consider them as a separate operation like Vietnam, like India or like that. So in that sense, India gets the preference even over Malaysia and Vietnam.
Got it. Thank you, sir. And one more question. So on the, I understand the 3rd plant is going to come online December this year. So any timeline that you are looking for the 4th furnace which we have envisaged? Any timeline there?
Yeah, so we will be observing the outcome of this expansion in the month of December. That is next month. By end of next month, we will have certain feeling about it. And in terms of our capacity expansion, board has already approved a plan for 1100 ton furnace. We will be working on that plan in the next quarter. That is Q1 of CY23. And then we will have to plan for fundraise and other things and then proceed with the plan. In the meantime, we will have to make an effort to get certain relief on ADD or basic customs duty so that our margins could be better and payback could be lower.
Got it. Got it. So can we assume that 2 years from now is the timeline that you're looking at? So if we start on the funding next quarter, so 2 years from there, or?
Yeah. So whenever we start placing orders and we are ready with the say funding plan, from there it will take 18 months. So you can assume 1.5 to 2 years time from now, minimum 1.5 years, maximum 2 years is what we feel.
Okay. Got it. And similar to, just continuation to my earlier question, that the cost benefit, like the operating leverage with increasing capacity. So now it's almost like with the third furnace, it will be doubling the capacity. So is it right that 3 to 4% will be the operating leverage that you are looking at? I just wanted to clarify my understanding.
Yeah. So our estimate that we will have about 3% operating leverage.
Got it. Thank you, sir. Thank you and all the best. Thanks for the opportunity, sir. Yeah.
Thank you. The next question is from the line of Santosh Kucheria, an individual investor. Please go ahead.
Thanks for the opportunity, sir. Just I wanted to know what is the selling price of glass at present?
Selling price of glass?
Yeah, in India.
So selling price, average selling price we have just mentioned it was about 139 rupees for the quarter.
Okay.
Yeah.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I hand the conference over to Mr. Sumit Kishore. Over to you, sir.
So just one follow-up. You mentioned that the hot repair did reduce the life of the furnace and you'll have to do a cold repair. Would there be a disruption when you do that, and what would be the duration of that disruption?
Yeah, of course, when you do a cold repair, you cool down the entire furnace and you take out all the refractory blocks and replace with new blocks. So there will be a certain, there will be complete disruption of the production at that point in time. You can, of course, run your post-production equipment for like tempering and all, but for that you need glass. You can buy solar glass from somewhere and then you temper it and supply it to the customers. What we are essentially trying to do is our plant is getting commissioned in India in December. So when the plant there is taken, in Germany is taken for cold repair, we will be supplying goods from India to those customers so that they are not starved of the material. So that's how we'll be managing it. But during the cold repair, of course, there will not be glass available from GMB plant at Germany.
Okay. And typically, what is the duration of cold repair?
It is estimated at 60 days, but we are counting 90 days for a restart of the production after the cold repair. Total 90 days period.
Okay, and you will be timing this cold repair. At what time?
Currently, we are thinking about February, but our team is assessing. Right now they are in the GMB plant and they are assessing the situation. Once we have a complete view from the point of view of availability of materials to the repair and all, and the necessary things can be put in place, and also from the customer's angle, we have to look at their being satisfied on the aspect of BRL or BOROSIL supplying glass to them. So our sales team also is interacting with the customers. So all those things will be considered at the top level, and then a decision will be taken.
Got it. Thank you so much, sir. There are no further questions at this point. Would you like to make some closing remarks?
Yeah. So thank you all for participation in this investor call. It has been very excellent session, I suppose, and we look forward to interacting with all the participants once again for the next quarter. Thank you.
Thank you. Ladies and gentlemen, on behalf of Axis Capital, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.
Thank you. Bye-bye.